Picture this. A country where April 15th doesn't matter anymore. No IRS letters in the mail, no scrambling for receipts and tax forms. No government reaching into your paycheck before you even see it. And while that alone sounds like something from a distant future or a libertarian fantasy, President Trump just brought it directly into the national spotlight as a realistic possibility. But that is not all, because in the same week, he unveiled two other things that nobody saw coming. A program that gives every newborn baby in America $1,000 invested in the stock market from day one, funded partly by a $6 billion private donation from Michael and Susan Dell. And then Costco, yes, Costco, launched a massive lawsuit against the administration over tariffs, raising serious questions about what comes next for prices, American manufacturing, and the entire economic strategy Trump is betting his legacy on. So today, I'm going to walk you through all three of these announcements, explain how they actually connect into a coherent economic vision, and show you what this means for your wallet, your grandchildren, and the future of American governance itself. Let's start with what happened in the Oval Office. That generated the most immediate shock. Trump looked into the camera and said something most politicians would never dare say out loud. The federal income tax, as we know, it might be going extinct. Not reduced, not reformed, extinct. Now, if you are like most Americans, your first thought was probably, wait, how is that even possible? Income tax has been part of American life for over a century. It funds everything from roads to military operations to Social Security checks. So how could it just disappear without the entire government collapsing? Here is the thing. Trump isn't suggesting we stop funding the government. What he is proposing is a return to the way America operated for the first 70 years of its existence, before income tax was ever introduced through the 16th Amendment in 1913. Back then, the federal government raised money almost entirely through tariffs, meaning taxes on goods coming into the country from overseas, not taxes taken out of your paycheck before you even see it. And once you understand why Trump chose this exact moment to say it, everything else, including the Dell donation and the Costco lawsuit, suddenly fits together into a coherent picture. Because the truth is, the current system isn't just broken, it is mathematically collapsing in real time. And everyone in Washington knows it, even if they won't say it publicly. The Internal Revenue Service, the agency responsible for collecting taxes and enforcing tax law, has been bleeding staff for years. Enforcement personnel have dropped by more than a third. Think about that. A third of the people who used to make sure taxes were collected properly are just gone, and the effects are showing up dramatically in the numbers. Right now, the IRS is only able to audit around 2/5 of all tax revenue. That is an all-time low. Even audits of millionaires, the people who should be under the most scrutiny, have dropped by more than 2/3. The enforcement machine is simply broken and can't be fixed through incremental reform because the underlying system is too complex, too political, too corrupted by special interests to ever function efficiently again. But a collapsing IRS is only half the story. The government itself is facing a debt crisis unlike anything in modern peacetime history, and this is where the numbers become truly terrifying, if you actually look at them honestly. In just the first 7 months of the most recent fiscal year, the United States government spent over $500 billion just on interest payments. Not on schools, not on healthcare, not on roads or bridges or national defense. Just interest, the cost of servicing money we've already borrowed. And here's the part that should make every American sit up and pay attention. We're now spending more on interest than we spend on the entire defense budget, more than we spend on Medicare. We are literally borrowing money just to pay the interest on money we've already borrowed. Does that sound sustainable to anyone with basic mathematical literacy? It gets worse, and I need you to understand just how bad this is. Since the year before the last presidential election, for every single dollar of new tax revenue that comes into the federal government, Washington has added more than $158 in new spending. Let that sink in. $1 in, $158 out. In the real world, that is not budgeting. That is not even reckless. That is mathematical insanity. Our national debt is now climbing by approximately $1 trillion every 100 days. $1 trillion every 100 days. At that pace, we're not in trouble. We're in a death spiral, where the debt compounds faster than economic growth can ever catch up. And the old system, the one built on income tax and endless borrowing backed by the assumption that growth will always bail us out, simply cannot survive this trajectory. The tax code itself has become a 4 million word monster that is not designed to raise revenue efficiently. It is designed for political favors, loopholes, special interests, and social engineering through the tax system. It doesn't matter how many more words you add. 6 million words won't fix it. 8 million words won't fix it. The system itself is fundamentally broken, and adding complexity only makes it worse. And that is precisely where Trump's tariff plan comes in, because if the IRS is collapsing, and the debt is exploding, and the tax code is a 4 million word joke, then maybe it is time to go back to what actually worked historically. For the first 70 years of this country's existence, from the founding until after the Civil War, the federal government was funded almost entirely by tariffs. And during that era, America transformed from a collection of agricultural states into an economic superpower that would eventually dominate the 20th century. Trump's proposal to swap income tax for tariffs is a pivot back to that proven model. Instead of taxing American labor and productivity, you tax foreign consumption. Instead of chasing down hundreds of millions of Americans for tax forms every year, creating an entire bureaucracy of enforcement and compliance, the government collects revenue at the ports when goods enter the country. It is simpler, more transparent, and it puts the burden on trade rather than on paychecks. Now, critics immediately say tariffs alone can't replace income tax revenue, that tariffs won't cover the nearly $5 trillion the government spends annually, and they're absolutely right if spending stays the same. But that is the quiet part of the plan that nobody wants to say out loud. Moving to a tariff-based system forces a reckoning. It caps the government's ability to spend endlessly. It starves the beast. It forces permanent structural cuts to waste, fraud, abuse, and programs that shouldn't exist. While all of this tax restructuring was unfolding, Trump unveiled a second, completely unexpected announcement aimed not at Washington, but at America's children. He called it the Trump Accounts Program, and here is how it works. Every child born in the United States between the years 2025 and 2028 will receive $1,000 deposited into an investment account tied to the overall stock market. That money will grow through compound returns until the child turns 18, at which point it becomes their property, fully private, fully theirs to use however they want. Now, if you are doing quick math, you are probably thinking, okay, $1,000 is nice, but it is not life-changing. And you'd be right if it just sat there doing nothing. But this isn't a handout sitting in a government account. This is an investment in actual markets with actual compound returns over 18 years. And over the course of 18 years, with historical market returns averaging around 7 to 10% annually, that initial $1,000 investment could grow into tens of thousands of dollars without any additional contributions. If the child and their family keep contributing even small amounts regularly, it could grow into hundreds of thousands. And over a lifetime of continued investment, it could reach well into the millions. This is America teaching investment discipline from birth. It gives every child, regardless of background or family wealth, a stake in the American economy, a reason to care about markets, about growth, about building wealth rather than just consuming. And it does this without creating another government welfare program that breeds dependency. But here is where it gets even more revolutionary. This program didn't just come from government appropriations. It came with one of the largest private donations in American history. Michael and Susan Dell, the founders of Dell Technologies, announced they would contribute over $6 billion through their charitable funds to jumpstart the Trump Accounts program. Not 6 million, 6 billion with a B. And their contribution isn't just for babies being born in the next few years. It is also for children who are already here, kids under age 10 living in communities where median household income is around $150,000 or less. Each of those children receives an initial deposit of $250 into their own Trump account. Think about what this signals. The private sector is willing to step up and invest massively in America's future. If the Dell family is leading the way, who is to say other billionaires won't follow, or wealthy Americans who want to leave a legacy that actually helps the next generation rather than just funding another university building with their name on it. Supporters are calling this a game changer because when a child turns 18, they won't just have money for college. They'll have options, real financial options. They can use it for home ownership, for starting a small business, for further investment. It gives them freedom and hope and a real shot at building generational wealth without starting life trapped in debt. For seniors especially, this is exciting because it means your grandchildren and great-grandchildren won't start life in the red drowning in student loans before they've even begun their careers. They'll start with something, a foundation, a head start that compounds over time. And just when these two massive announcements seemed like enough news for 1 week, Costco stepped in with something nobody expected. The big box retailer known for bulk groceries and unbeatable deals filed a lawsuit against the Trump administration demanding refunds for tariff costs, potentially billions of dollars. And they're not alone. Dozens of other companies have filed similar suits, but Costco is by far the biggest and most recognizable name to challenge the White House directly on tariffs. So what is going on, and why does it matter to your wallet? As part of his economic strategy, Trump imposed tariffs on a wide range of imported goods, using emergency powers under a law from the late 1970s. The idea was to encourage American manufacturing, protect domestic industries, bring jobs back home by making foreign goods more expensive, and therefore making American-made goods more competitive. But here is the reality. Companies like Costco rely heavily on imports. Roughly a third of the products they sell come from overseas, everything from electronics to clothing to food, including things like shrimp from India. So when tariffs go up, Costco faces an impossible choice. Either absorb the cost and take a massive hit to profits, or pass it along to customers and risk losing business to competitors. Costco isn't just complaining. They're taking serious legal action. Their lawsuit argues that Trump's use of emergency powers to impose these tariffs was unlawful, that he exceeded his constitutional authority. They're asking a federal trade court to rule that the tariffs were imposed illegally, and if the Supreme Court eventually agrees, Costco wants every penny they paid in tariffs refunded. There was a deadline. Costco had until mid-December to file or risk losing the ability to claim refunds later, so they filed. This is significant for several reasons. First, it is extremely rare for a major public company to directly challenge a sitting president in court over economic policy. Most corporations work behind the scenes, lobbying quietly, negotiating deals. But Costco went public with a lawsuit, which tells you how seriously they're taking the financial impact. Second, the Supreme Court has already shown skepticism about whether the president has authority to impose sweeping tariffs under emergency powers without specific congressional authorization. Most justices sounded doubtful during oral arguments in related cases, so Costco might actually have a legitimate shot at winning. But here is the tricky part that reveals how complex this gets. Even if the Supreme Court rules in Costco's favor, it is not clear how refunds would work, operationally or fiscally. Would every company that paid tariffs get their money back, or only the handful that filed lawsuits in time? And where would that money come from? The government doesn't have a surplus sitting around. We're running trillion-dollar deficits. One justice raised exactly this concern, essentially asking, how do we unscramble this egg once tariffs are collected and the money is spent? Reversing them isn't simple. It is not just cutting checks. It could create a massive fiscal crisis on top of the existing debt problems. So what does this lawsuit actually mean for you and your wallet? Let's talk about tariffs and prices in plain terms without political spin. When government puts a tariff on imported goods, it raises the cost for companies, like Costco, to bring those products into the country. Costco can either eat that cost or pass it along to you at checkout. Most of the time they pass at least some of it along. So if you've noticed certain items at Costco are more expensive than they used to be, tariffs are likely part of the reason. Not the only reason. There is also inflation and supply chain issues, but tariffs are definitely in the mix. Now here is where we need to talk about the elephant in the room that is driving all of this. The affordability crisis that is squeezing American families to the breaking point. According to recent data, nearly a quarter of American households are now living paycheck to paycheck, spending over 95% of their income just on necessities like housing, gas, groceries, childcare. These families have almost nothing left over for emergencies, no cushion for saving, certainly no room for investing or planning for the future. They're stuck in pure survival mode, and the numbers are brutal. On average, American families are spending about $200 more per month than they were a year ago, just to buy the same amount of stuff. Over a year, that is an extra $2,500. And if you go back to early 2021, when the previous administration took over, the increase is even steeper. Families are paying about $1,000 more per month compared to then, $1,000 every single month just to maintain the same standard of living. Now here is the uncomfortable truth that nobody wants to say. Prices keep going up because people keep spending. I know that sounds harsh, but it is basic economics. If consumers actually stopped buying things they didn't absolutely need, demand would fall and prices would have to come down. But we don't do that. We keep spending, we keep buying, and as long as we do, companies have no incentive to lower prices. Historically, two things make people pull back: a recession or very high interest rates. And right now we're trying to avoid a recession, which means the only other tool is keeping interest rates high enough to cool demand. But that makes borrowing expensive, which hurts families trying to buy homes or start businesses. So you see the bind we're in. It is not simple, and anyone who tells you there is a quick fix is selling you something. Which brings us to what Trump said that caused such a massive stir. During a cabinet meeting, a reporter asked about affordability, and Trump's response was blunt. Affordability is a hoax that was started by Democrats. Predictably, the media ran with that. Headlines everywhere: Trump says affordability is a hoax. Critics pounced. It became instant ammunition for opponents. But here is what got lost. Trump wasn't talking to struggling families. He was talking to Democrats, saying they're using affordability as a political talking point to attack him even though they were in charge when prices skyrocketed. He was calling out what he sees as political theater. Now, is it the best way to communicate that? Absolutely not, because when you say affordability is a hoax, people hear your struggles aren't real. And that is not what Americans want to hear right now. They want to hear, "I understand. I feel your pain. Here is what we're doing to fix it." And that messaging gap is why Trump's approval on the economy is dropping to around 36% in recent polls. People don't want to hear about stock market gains if they can't afford groceries. They don't want GDP statistics if they're living paycheck to paycheck. They want to know someone in Washington understands what they're going through. So, where does all of this leave us? What we witnessed this week wasn't disconnected headlines. It was a turning point where three enormous forces collided: the collapse of the old tax system, the birth of a new wealth-building model for children, and a corporate revolt against trade policies reshaping the economy. The IRS is dying. That is not speculation. That is documented fact. The debt is spiraling into a death spiral. The old system is failing. And into that vacuum, Trump is proposing something radical: replace income tax with tariffs, give every child a financial stake from birth, force American manufacturing to rebuild through tariff pressure. It is not a new idea. It is an old proven idea being rediscovered, because the new system has catastrophically failed. Whether this succeeds or fails will determine America's economic future for the next generation. If you found this breakdown helpful explaining what is actually happening beneath the political noise, hit subscribe, drop a comment with your take. Do you think eliminating income tax is realistic or fantasy? Would you want your grandchildren to have Trump accounts? Does the tariff strategy make sense, or will it backfire? Your perspective matters, because this affects everyone's future.